Well, I mean, it's physical demand coming into the COMEX, coming out of London, coming out of Switzerland. The demand is off the charts. The lease rate in London, which is typically 0.5%, rarely gets above 1 or 1.5%, even in times of stress, and then it would typically only be for a short period of time. The lease rate is the rate at which it would cost to borrow bars to short or to cover a position, is as high as between 5 and 6.5%. And that's an anomaly, to say the least. It signals great tightness inside of the market at the highest of levels. The amount of silver that's coming into the COMEX is off the charts. From a technical formation, you have a 45-year cup and handle that might be as powerful of a formation as you will ever find in technical analysis, especially one that is mature as silver. 45 years, and the way that it works is the beginning of the cup would have been 1980 at $50, and then it goes down to the bottom, the shape of like a bowl or a cup, to $4 or thereabouts in the early 90s, and starts to come back up to 2011, almost to the top of the cup, doesn't preach it, comes down in consolidation for the handle, and here we are at basically $44, very close to moving back up. Now, the way that works is once you breach that level, the top of the lip of the cup, the $50 level, first of all, there is no resistance at all. But the way technical charting would work is that you take the difference between the top of the cup and the bottom, which is approximately from 50 to 4, about $46. You would add it onto the top, and your next target upside would be $96, 96 to $100. Is that crazy? No, it's not. I mean, triple-digit silver is something one could expect at some point. And then when you realize that the government reclassified silver now as a critical element, a critical mineral, they've put a floor under the price of silver. And so I think, all of the talk over the last 6-7 months, and I said no from the get-go, this is not about tariffs, never was. It was a ruse to bring it all back. This is reshoring. This is understanding that the biggest money in the world understands the significance of things like silver. The biggest traders here in the United States, the institutional traders, when they start to pay attention, when they start to accumulate, we should all pay attention. We've been talking about this on a central bank level for a few years now, about the deliveries into COMEX for a few years now, about the accumulation by India, by Russia, by Saudi Arabia, by China. China flying around the world and buying doré when they're the second largest producer in the world, sending it back to China for refining. Why would the second largest producer of silver in the world find it necessary to fly to Latin America to buy concentrate and doré directly from a miner, pay double what the West will, ship it back for refining if it were just this, this rock that hasn't done anything forever? And I don't know, silver right now feels to me like gold did about a year ago, when it was right in the $2,100-$2,200 range, and it kept trying to break out and would, consolidate and try to break out, come down, consolidate, in a long period of consolidation, and then broke through, and it hasn't looked back. I would say that's about where silver is right now. I look at it as the most undervalued asset in the world, and now evidently the United States finds it significant enough to call it critical. I think there are very few opportunities asymmetrically where you have such low downside and such high upside, being asymmetrical. For an asset like this, it's once a generation. So I think the drivers are big money waking up now. You could argue that the public is not even part of this rally yet. What happens when they collectively wake up? This is being driven by people at the highest of levels before the public catches on, which is another contrarian indicator. So yeah, I think what's driving gold and silver is that silver is finally catching up. Gold is being rewoven into the monetary fabric of the globe. And thankfully, someone in this administration, I think, grabbed President Trump and said, if we don't do this, we will forever regret it. This is our last opportunity to bring some of this home, because the world is moving away from treasuries and dollars and paper promises. And then you add on to it sanctions and tariffs. after 4 years of nightmarish domestic and foreign policy prior to this administration, you could argue a system that is fully based on trust has squandered the majority of it. And then, look, I would vote for President Trump again, but I don't agree with the way he is antagonizing even his allies, like India, as an example, throwing on 50% tariffs, and many of the other countries in the European Union and Canada. Maybe there's something bigger at play, which we've talked about a lot, but I think it's just beginning, quite frankly. Look, you have a comment coming out of Goldman Sachs a couple weeks ago that if the market even thinks that the Fed has lost independence, well, okay, the firing of Lisa Cook, who's going to go in there? It'll be a Trump bobo. You look at Stephen Murin replacing the last Fed official who left, who is the author of the Mar-a-Lago Accord. The Fed has lost independence. And mind you, this is nothing new. You go back through history, you'll see this happening with multiple presidents, but it's like they give you crumbs and the crumbs, well, we told you that this could happen. And now you have, banks talking as high as $6,600, $4,000 being base case for most of these banks. Look, you put silver at 5,000, like Goldman says, and divide it by 70, which would be, way higher than its average for the past 100 years, and still 10 times higher than it's coming out of the ground at. You're talking $75 silver or thereabouts. So to me, this is just beginning, Elijah. Honestly, I do believe that, and I think this is the time that most of us have been talking about as typically following suit way early, but I'd rather be months and even years early than 60 seconds late when the switch flips on this.
Well, folks, let's not sugarcoat it. What we're living through right now is the most consequential shift in the financial order since Nixon closed the gold window in 1971. And I don't say that lightly. Every week, I come on here and tell you about footprints, about lease rates, about COMEX deliveries, about sovereign accumulation. But what we're watching now is all those dots connecting into a picture that's hard to ignore. Gold and silver are being rewoven into the global monetary fabric, and the West is getting caught flat-footed. Let's start with the silver story, because honestly, it's becoming too glaring to brush off. The lease rate in London, the cost of borrowing bars, usually sits around 0.5%, even in moments of stress, maybe 1%. Maybe 1.5%. Right now, we're talking 5 to 6.5%. That is not just unusual, it's historic. It's a signal flare telling you the market is tight, the bars aren't there, and people are scrambling. Meanwhile, the amount of silver flowing into COMEX is off the charts. We've got a 45-year technical formation, a cup and handle stretching all the way back to 1980. Think about that. 1980 at $50, the top of the cup. Then the long slog down to $4 in the early 90s. Slowly we climb back up. 2011 almost hits the top. Then years of consolidation, the handle forming. And here we are, right at 44, staring at that $50 lip. Now what happens when you breach that? First, there's no resistance. Second, technicals say you measure the depth of the cup. 50 minus 4, about $46, and add it to the top. That's a $96 target. Call it 100. Is that crazy? Not at all. In fact, given silver's industrial role, given monetary demand, given the government itself now calling silver a critical mineral, 100 looks conservative. And this is where I want to pause and talk about asymmetry. Everyone throws that word around in investing, but silver is one of the purest examples. Your downside? Limited. You're not going to $4 again. Not when the US government just told you it needs silver for national security. Your upside? Triples, quadruples, maybe tenfold. That's once in a generation stuff. Now, let's zoom out to the geopolitical chessboard. People keep asking me, Andy, why is China, the second largest silver producer in the world, flying to Latin America to buy doré, paying double Western prices, and shipping it back for refining? Do they not have enough silver at home? Of course they do. They're producing massive amounts domestically. But here's the point. They're thinking generationally. they're not just hoarding what they produce, they're hoarding what everyone else produces too. They're locking down supply chains. They're playing the long game. It's the same with gold. Why does China buy every ounce of ore they can get, refine it domestically, and never let it back out? Because they know gold and silver are power. They are the tools that ensure sovereignty when the dollar system buckles, and they see it buckling. That's why they bought the London Metals Exchange. That's why they're building warehouses all over China and across the Belt and Road countries. That's why they're setting up vaults in Africa, Saudi Arabia, Singapore. Meanwhile, here in the United States, we eliminated our silver stockpile years ago. Let me say that again. The richest nation on earth has zero strategic silver reserve. None. Even the mint has to go into the open market to buy silver just to make eagles. And now, after ignoring it for decades, Washington suddenly wakes up and recategorizes silver as a critical mineral. What does that tell you? It tells you the insiders know what's coming. They know silver isn't just a shiny rock for coins and jewelry. It's the metal that powers solar panels, electric vehicles, AI servers, 5G towers, missile guidance systems. Try running a modern economy without it. Now let me inject a little humor here, because otherwise this stuff gets heavy. Remember when the government told us inflation was transitory? Yeah, about as transitory as your mother-in-law moving into the guest room for a couple of weeks. We're 3 years later, and she's still cooking fish in your kitchen. Inflation's not transitory, and silver's not optional. And this brings me to the real elephant in the room: trust. The entire Western financial system is built on it. Fiat currency is just a promise. A treasury bond is just a promise. Derivatives are just promises stacked on promises. And what happens when the world stops trusting those promises? They demand something real. That's why gold and silver are flowing east. That's why central banks are buying record tonnage. That's why India, Russia, Saudi Arabia, China, even countries that used to toe the dollar line, are diversifying. Meanwhile, what are we doing? We're antagonizing allies with tariffs. We're weaponizing the dollar through sanctions. We're running deficits so large, they make the Roman Empire look frugal. Folks, a system based purely on trust has squandered the trust. Now, I want to address something else, because it's easy to romanticize this moment as if it's all upside for metals investors. The truth is, what we're talking about is the end of a monetary regime. And those don't end quietly. They end with volatility, with crises, with pain. You're going to see days when gold drops $200. You're going to see silver slammed $5 in an hour. You'll see headlines screaming, "Bubble burst!" And yet, beneath that noise, the structural shift keeps grinding forward. Think about the footprints we've been watching. Record COMEX deliveries. India sucking in silver like a vacuum. LBMA vaults bleeding inventory. Lease rates spiking. The Fed the only central bank still short gold. These aren't conspiracy theories. They're facts. They're visible in the data if you know where to look. And every now and then, Wall Street slips up and tells you the truth. Just a couple of weeks ago, Goldman Sachs floated the scenario. If the market perceives the Fed has lost independence, gold could hit $5,000. Just like that. Their words, not mine. Well, let's ask the obvious. Does anyone really believe the Fed is independent anymore? When Trump openly talks about revaluing gold, when Fed appointments are openly political, when Steven Mnuchin, the guy behind the Plaza Accord, is floated as a Fed governor, we're supposed to pretend the Fed is a neutral technocratic body? Please. The Fed's independence is as real as pro wrestling. The punches may look convincing, but the outcome is scripted.